Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody. Today we will take a look at the Canadian dollar. So on euro currency, indeed, as market has continued to move higher, so our suspicions were not in vain actually. The short-term setup of the possible downward continuation has been erased by the price action. At the same time, market right now stands at the daily overbought area, and it's not really a good time for taking the long position immediately. So yes, short-term context on the daily chart has turned to the bullish because trend has turned bullish. Major bearish patterns that we've got on the weekly chart as market has moved above the top has been erased. So in general, it seems that we will keep an eye on the possible bullish setups on the euro currency that could be formed there on the common week. But definitely today it's not the time to go long yet, and anyway we'll need some dip to buy, so we need some retracement. Also, as usual, we will take in detail view on the euro currency in our weekly research on the weekend, and that's why I thought that maybe today we'll take a look at something else, and this could be Canadian dollar. First, guys, just a few words on the situation that we have discussed yesterday. So why market has responded irrationally on inflation data 2 days ago. So currently there is opinion that some hidden ongoing processes with the capital flow stands between the European Union, Great Britain and the United States due to changing in the tax reform and so on, and that really could make an impact on the forex market because really very fast action here stands. Major reversal patterns that have been formed on the dollar index have been erased, so definitely that's something really big stand beyond these processes, but and we can't exclude it totally. At the same time, taking a look just at some fundamental data, I think that another kind of explanation exists to this process, because the aggressive Fed policy and rating and increasing on inflation, it's a really valuable moment if overall money supply stands at the same area approximately, and euro stands in the same way to other central banks in the balance in the current fiscal policy. But when your economy assumes the big increasing in the money supply, the inflation could be treated as a bit differently as a result of this rising of the money supply. What I'm talking about. So you probably know that due to the tax reform in the current year, the United States budget deficit could be ballooned more than $1 trillion. This is the first moment. Second moment, due to different Donald Trump programs and the government spending, this was the announced program that the overall national debt could be increased to the $30 trillion within the 2 years, within the decade. So really, this is really very huge amount of money, and that makes actually this shed the different light on the process on the inflation rising and rising on the yield. So it could be, the rising of the bond yields on the United States Treasuries. It could be not just a response to the Fed policy, but it could be really investors' demand for high yields on the asset that's become cheaper. So the supply of the United States dollars are growing, and investors need to get more yield for just demand more high yield for purchasing the asset that's become cheaper. This is understandable. So that's why, as you can see, maybe reaction was opposite to rising inflation. So rising inflation could be treated right now not as a positive sign, but as a response on the increasing of the money supply on the coming really huge spending on the United States government. So that's another moment here exists. While on the euro, for example, in the euro area, it's an improvement in the economy, and indeed European Central Bank stands in few steps from the changing on its rate policy, but at the same time they keep the deficit and the limited levels as it stands according to the European law, and this just put the picture in an absolutely different category. So it's more valuable situation compared to what is going on in the United States. This, I think, it's a major explanation right now from the fundamental point of view. So now let's go back to situation that we have on the Canadian. So we will start on weekly chart, and here I just pay attention to this moment. So here, guys, we probably will get today, it's Friday today, we will get weekly bearish grabber pattern. These grabbers suggest they're dropping below these lows. How deep these lows will be, it's difficult to say, but minimal target of the grabber stands at 2250 lows, so these lows should be washed out. Now, if we will take into consideration all the stuff that we have, United States dollar and so on, the picture that was forming here, it's different compared to what starts forming here, because until that moment, we could talk about, I don't know, some kind of a hand-shoulder shape, right? So you can see neckline, minor left shoulder, head, reversal swing, deep retracement, and market has started forming the right shoulder, right? So this here is bulls should take the control over the situation and put price higher. That indeed has started to happen when the dollar starts to rise in the previous couple of weeks. But recently, 2 days ago, situation has changed drastically. So you see what is going on the crude oil. So currently, it's not just United States dollar is dropping, but the crude oil is also rising. That could make the additional support to the Canadian dollar. And reversal at the starting point of the right shoulder, it's quite irrational for the hand shoulders pattern, because logic of this pattern is simple. This part of the pattern should be controlled by the bulls. I mean in a direction on the chart. So when you see that it's not happens, it means that something is wrong here. And indeed, this could be a really fast action to the downside. Anyway, we probably will get this pattern by the end of this week. This is the pattern that I like to have because they stand in a direction on the previous action, not in the opposite direction. So when you see market drops, on retracement market forms grabber and downward is continuing. So this is better situation compared to when the grabber is forming in an opposite direction. But of course, they work not every time. Also could fail. For example, you can see here a drop, grabber has been formed, but market has continued to move higher. So we can't exclude it totally. But guys, here I think that chance is not really bad that it will work, because just taking into consideration the fundamental background that we have. Because we have changing not only in Canadian dollar, we have the changing on the dollar index, on the euro currency in general across the board. So I think that's more reliable step here. It's really good work. On the daily chart, guys, there is some tricky moment exist. So you can see that although this is the grabber is forming, but at the same time we have the shape of the hand shoulders, minor hand shoulders. This is not the same pattern. The big pattern stands right here, right weekly. But we have as the part of this is actually the bottom of the right shoulder of the weekly pattern. We have the minor hand shoulders as well. And rally here was really fast. That's why before taking the position based on the weekly grabber, definitely we will need some bounce. So some retracement here. And this tricky moment stands with this situation, because currently we do not know whether these hand shoulders will work or not, or maybe it will fail. Because based on this pattern, it suggests some kind of the A, B, C bottom as soon as the market will complete this pattern. D action, right? But we here, with the dealing with the grabber, we counting that market will fail here and will continue to move lower. So that's the moment that's really important, and that's why probably on the intraday charts we need to see some more confirmation from the market that indeed some signs maybe of the inability of the market to proceed action high, some clear reversal patterns maybe will be formed on next week. But existing of these hand shoulders, it's a kind of the tricky moment dealing with the grabber in the weekly chart. On the 4-hour time frame chart, what is we could get today? Market is forming this ABCD pattern, and its target stands approximately 24.36. And take a look at it. It creates an agreement with the 24.15.16 area. So here's just 20 pips difference. I think that some upward reaction that we would like to get could start from this point. And this retracement probably we will be watching for as an opportunity to go short based on the grabber. So depending on how it will develop, what the price action will be, what the patterns will be formed, we will decide whether to take the position based on the grabber or not. At the same time, maybe it will be possible trying to take the scalp long position here, because this will be strong support. At least minor response here is possible. It's technical response to the support area, and that will let us to move stop to break even. So if you're a scalp trader, you could keep an eye on the situation as well, because if here you will get some bullish reversal patterns on the 30-minute chart, on the 50-minute chart, for example, butterfly or hand shoulders, you could try to take the position with the minimal targets. Maybe 3-8 retracement will be happening here, at least 3-8 retracement, maybe even greater. So that is set up for scalp traders. So that being said, what we have on the Canadian. First, today we are watching for completion of this ABCD target. Second, we are waiting for retracement. And if retracement will be suitable for us, maybe some bearish patterns will be formed. For example, got just triple to sell or something of that sort. We will decide our participation in the trading of the weekly grabber pattern that has really good potential. So you can see approximately 2 points to the downside, or even greater, if the processes that we have discussed in the United States economy will continue. Because here we see the real breaking of the major setup on the monthly charts on dollar index, for example. It's going to be really important and could lead to the far-going consequences. That's why I suspect that if this grabber will work, the Canadian dollar hardly will stop right at 22.50. I think that we could speak about the breaking of these lows as well. It's going to be really solid downward drop. Because at the same time with this stop grabber, market will raise this kind of the hand shoulders, and usually when market fails with the hand shoulders, it drops below the head. So that's why this potential of these trades could be really more significant, and definitely it's worth of our attention. So let's see how situation will develop here as well.